Not so long ago, everybody had been talking about Pump.fun, the Memecoin launchpad on the Solana chain. After a few months, the project also released its own token, the Pump token. But now Pump seems to be disappearing in a sea of red. All altcoins are going down and Pump is somewhere around here. It's down 6.5%, while all of the project's revenue is getting used to buy back the token. 143 million worth of Pump had been purchased. So why is this token not standing out? Why can't it outperform the rest of the market? There are several reasons, and we're going to look at the on-chain data in a second. We're trying to find out whether or not it still makes sense to buy Pump. Now what we see over here, that's the revenue of the Pump ecosystem over time. So clearly there's now less and less purchases that are being made through the buyback program. It peaked at the beginning of August of this year. There's a big problem with the on-chain data of Pump.fun, and that is wash trading. A lot of tokens get transferred from left to right in order to generate trading volume, in order to generate attention. And that attention, of course, should lead in the end to purchases by the average retail investor. Have a look at this overview here. This is the entire Solana chain. And in the last 24 hours, we saw more than 8 billion worth of trading volume. Now, if we isolate just Pump.swap from that, we've got 5.7 billion worth of trading volume. So the vast majority of Solana trading volume now happens on Pump.swap. But is this all natural, or rather artificially inflated trading volume? I tend to say the latter is the case. Because have a look at the trading of the Pump token itself, which by the way, by far is the largest token in terms of liquidity on Pump.swap. That highly liquid token only had 257 wallets interacting with it on the Solana chain in the last 24 hours. So somehow this doesn't really add up, right? Why do we have millions of dollars worth of liquidity, but only so few wallets that trade the token directly? 257 wallets is really nothing, especially when we compare that the number of holders on chain is more than 100,000 wallets. It looks like the attention on Pump is declining over time. I've published several videos on the Pump token on this channel before. Here's the first one. It outperformed the average video. So the average video is here in gray, and that very first video on the Pump token is the line in blue. So roughly double the amount of views that a regular video gets. Another video followed. Here's another one. Here's another one. And so we can see that over time there is less and less interest. The recent videos even underperformed the average video on this channel. Every token has two major factors that impact the price. We've got the benchmark, so for the Pump token, that's Solana. When Solana is going up, then the Pump token is likely going up as well. The second factor is what happens specifically to the token. But there's a case to be made that the Solana price development is actually more important than whatever happens to Pump directly. What we see at the top, that's the price of Pump. So we're looking at the last 3 months of price development. At the bottom, we see the development of Solana. So when Solana is high, the Pump token is high. When Solana is low, the Pump token is low. So there's a lot of correlation. Both tokens crash at the same time. Both tokens rally at the same time. So really, if we want to know whether or not it makes sense to buy Pump over Solana or Solana over Pump, we should look at relative valuation. And then we're getting this chart. This is the Pump token relative to the Solana price. When this is high, Pump is expensive. When this is low, Pump is cheap. Pump has the potential to outperform Solana during a rally by 170%. The dotted line that we see over here, that's the historical average price. So we're currently slightly below the average ratio of Pump to Solana. Now what happened over here? Why did we suddenly see the turnaround in the middle of September of this year? Why did Pump underperform Solana by that much? Especially given that we've got all of those purchases through the buyback program. Now one argument is that the buybacks actually peaked exactly at that point. So the 15th, 16th of September was the peak. Since then, we tend to go down with the buyback. So whatever insiders are currently selling the Pump token are now doing this at a stronger rate than what the buybacks can buffer. But then there's also on-chain activity. What we see on the left is the number of recurring traders and first-time traders over time in the last month. And this tends to decline, again, indication that there's less and less interest in Pump. On the right side, we see the number of token transactions. That's a bit more stable. What we see here on the left, that's a trading volume on-chain in US dollars. And on the right, we normalize that trading volume to 100% per day. So we can see who makes up more of the trading volume over time. It seems like the small retail investor trades Pump now more compared to the early days. It looks like the small retail investor is getting very excited about the buyback program, while the whales aren't doing anything. What we see here on the left, that's the number of wallets that have at least 250,000 Pump tokens. So at the current price, that's roughly $1,000 worth of the token. In the middle, we go a 10x from that. So that's now 2.5 million tokens, or $10,000 worth of the token. On the right, it's 25 million tokens, or $100,000 worth of the token. The small retail investor is getting excited about the buyback program. They are buying, but the smarter money, the money that actually tends to long-term win in crypto, they are not buying. But really, short-term, it's not even the on-chain metrics that are influencing the price. We have seen how the Pump token only got traded by 257 wallets in the last 24 hours. Short-term, what really moves the price is the bets on Pump. So in the last 24 hours, we only saw 65 million worth of trading volume on the spot market. But on the perpetual futures market, we saw 350 million. So in other words, most trading volume now happens with levered bets on the price, not anymore on the spot market directly. And so isn't it fascinating how the Pump token peaked close to 3 billion, while individual tokens of the Pump.fun ecosystem, they went to almost the same heights. Here is Fartcoin at 2 billion. Most perpetual futures traders are betting on rising prices. So the funding rate is positive. The longs have to pay the shorts in order to get more price exposure. That's at least true for the vast majority of the time, which is normal for most cryptocurrencies. The trading volume isn't just coming down on chain, it's also coming down on the perpetual futures market. And there is positive correlation, as in the price tends to be high whenever the trading volume is high as well. Now, since we're currently low in trading volume, this could actually be an opportunity. We want to buy when trading volume is low, when attention is low. We want to sell when attention is high, trading volume is high. And this thesis becomes even more convincing once we look at the open interest, so the amount of bets on the Pump price. There's a strong correlation between open interest and price. So open interest is in green, the Pump price is in yellow. Whenever there's less bets on the price, then the price tends to be low. Whenever there's more speculation on the price tends to be high. And we are currently at historically low levels of open interest, which again is a positive sign. And so yes, I do not like this underperformance since the buyback program slowed down. But I do like that we are quite low on this trading range. And I do like that there's very little speculation on the token right now. And we might currently be in recovery mode. There might be a chance that Pump will outperform Solana by 23, maybe even 60%. I don't think now is the right time to bet on falling prices of Pump. There is a good chance for a recovery. Will I hold Pump over the next years? Certainly no. The reason why I don't like a long-term investment in the token is because the Solana ecosystem as a whole is already struggling. This is the total value locked of Solana over time. And yes, this looks okay, but once we measure this in SOL, we have seen the growth stop since April of this year. So half a year of zero growth of decentralized finance on Solana. And the most concerning metric is this over here. This is the number of active addresses on the Solana chain. This grew massively with the Pump ecosystem, but then more and more people got burnt and lost their money, and so they're exiting, and this still continues to go down. And I'm not a fan of holding something long-term when the overarching ecosystem is on the decline. Again, there is a lot of correlation between Pump and Solana. And yes, there might be a short-term rally of Pump relative to Solana, but if Solana itself is going down, the US dollar gains in Pump might be very limited. Now, there's a very interesting misconception with altcoins. Have a look at this chart here. This shows total 3 ES divided by Bitcoin. Now, what does this mean? Total 3 is the market cap of all cryptocurrencies that are not Bitcoin and Ethereum ES means that we also exclude stablecoins. So this is all of the volatile altcoins that are not Bitcoin and Ethereum. And we look at that market cap relative to Bitcoin's market cap. So how are the volatile altcoins doing relative to Bitcoin? And it seems like this is trading in a range in the last 8 years. If we just look at the prior year, we also seem to just performed in the same way as Bitcoin. But clearly that is not true. Have a look at the performance of these smaller altcoins in the last year. Pretty much everything is red while Bitcoin went up. The key to the puzzle is to understand the difference between market cap and price. This here is an example of WorldCoin. WorldCoin over the years saw an increasing market cap. It went from a peak of 1.5 billion to 2.5 to more than 3 billion. So WorldCoin tended to grow in market cap. But have a look at the long-term price chart. It looks very different. WorldCoin's price peaked at close to $10 and is now below $1. There can be a massive disconnect. In this chart here, it just looks at the altcoin market cap relative to the Bitcoin market cap. And this is true for many altcoin related metrics. It's true for the others market cap. It's true for the others dominance. It's true for dominance charts in general. When we look at the Bitcoin dominance or the Ethereum dominance, we are just comparing market caps. We are not comparing prices. Even when the Bitcoin dominance stays stable, Bitcoin very likely has outperformed most altcoins because altcoins might have been stable in market cap, but they might have gone down in price. This effect that we see for WorldCoin is very typical for altcoins. Now here's the circulating supply of WorldCoin. Again, just an example of what's going on with the market. We had 500 million WorldCoin at launch, and that more than 8x'd over the span of 2 years. When we look at the entire altcoin market, at least the tokens that are tracked by Tokenomics.ai, we've got weekly unlocks of roughly $1 billion. So if the demand for the altcoin market is below $1 billion, if the altcoin market doesn't grow that much every single week, then the price goes down. Because all of those unlocks, they are tokens that get allocated to the early investors of the altcoin projects. They get allocated towards the founders. They get allocated towards the insiders. So they are cashing out at a rate of 1 billion per week. And if the retail investor doesn't buy at the same rate, then price goes down. So here is an example. This is WorldCoin in US dollars. Here is WorldCoin relative to Bitcoin. So much more consistent underperformance. Now there are two potential takeaways from this. The first one would be to just completely stay away from altcoins altogether. Altcoins are rigged, altcoins are through dump on retail investors. But the second potential takeaway is to maybe flip this thing around. So we are betting on falling prices of WorldCoin, while at the same time betting on rising prices of Bitcoin. So when we flip this chart, we get this here. This looks quite interesting, doesn't it? Since launch, Bitcoin outperformed WorldCoin by 836%. So that's the kind of performance we are looking for. The problem, of course, is volatility, especially here at the end. So WorldCoin occasionally does have positive news. It still has development. It's still an active project. And so a strategy like this can still lead to temporary drops of 55%. Despite the long-term outperformance. So the idea to bet on token inflation structurally is a good one. The idea to bet on falling prices when things look like this is a good idea. But risk management is crucial, and we have to look at assets that don't have that much more active development, where we don't see any positive news around the project anymore. Here's an example I like to give regularly on this channel. This is Bitcoin relative to Balancer. Balancer also has a high token inflation. And yes, there can be some drawdowns along the way as well, but they're not 50%, they're only 30%. And on a logarithmic chart, this looks much more manageable. And so this strategy doesn't just work in theory, it actually does work in practice. Let me show you how. When we look at this relative valuation chart of Bitcoin to Balancer, and we compare this to just buying and holding Bitcoin, so that's now the line in orange, we can clearly see how betting on the differential, so betting on falling Bollinger prices by betting on rising Bitcoin prices, has a way better long-term risk-adjusted return. And so I followed this strategy for the last 4 years. This is a monthly chart. Had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices at the same time, I got the performance here in black. Now the problem is, just because I make profit with that strategy doesn't necessarily mean that you have to make profit with that strategy. But I do believe in the strategy that anybody can mirror similar performance. What we've got over here is a copy trading vault. So the premium members of this channel had the possibility to invest in a capital pool. That capital pool is closed until the end of the year. But anybody that deposited in July of this year is now up roughly 20%, while Bitcoin since then went down in price. Of course, the massive market disruption that we saw recently helped us as well. It was actually the best weekly return ever. It brought us more than 9%. Most others got wrecked, but we made money. And so I made several videos on the topic. There's one video explaining the copy trading vault, but again, that vault is closed until the beginning of the year. But here are the two more important videos: using perpetual futures to bet on relative valuations, and risk management with relative valuation bets. Risk management is extremely important, because if you don't know how to do that, you get wrecked during volatile times. You don't make money. So here are the two videos. This is 34 minutes in length. Here's the other video, 28 minutes in length. And once you've watched those two videos and you've joined the premium groups, I will share my favorite trade with you. So the favorite trade will look very similar to the balancer trade that we looked at. If you are not making money with that favorite trade after holding it for 1 month, I will refund the premium membership fee to you. So really, you are not risking those $125 US. If you're not making money with the trade, you just get this refunded. I will not ask any questions. If you want to be part of the next copy trading vault and you don't want to make the trades yourselves, you simply just want to deploy capital, then feel free to check out this video over here. This was the introduction to the vault from July. And feel free to consider to sign up for the annual membership, because the yearly subscribers, they get access to that copy trading vault that currently is closed. Of course, you can simply start out with monthly, start the trading yourself, and then swap to the annual membership later on. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. So next time on YouTube, or see you in premium. Cheers.